Market review. All right. It haven't been a long time since I did market reviews. Index. Looking over Stan Weinstein stage analysis applied to the NASDAQ. Applied to TSX Venture, TSX, SPX 500. That's a whole bunch of stocks that are on the NASDAQ and the New York Stock Exchange. We'll check out the New York Stock Exchange. And I'm adding the EAFE. Those are non-North American stock exchanges, markets from solidified, bona fide countries. Germany, Great Britain, France, the big ones, Japan. And I added the emerging markets, guys. So what do we have in there? China, Korea, Russian Federation, Taiwan. But you still got like this giant like Alibaba, man. What? Not on the NASDAQ? Well, Alibaba is 4 or 5% of EEM, guys. So let's do it, guys. Let's see where we are at. I'm going to keep all my previous lines that I did. I like sometimes just redrawing them, but for all these markets, all these indices, what I did in my previous series, I had established the 2008 breakdown, the high, its high, and how it broke down, how much time it took for that index to break down, first breakdown, and after that, when it really broke down in at the early fall there, September, July, August, and September. This is the candle of September. So this is the high. And after that, how much time? 1, 2, never went back above that. And 2-3 months later, first breakdown here. And after that, price action below the 12-month moving average, retesting it, and going back down, retest, and boom, went down with the rest. And this is what the NASDAQ looks, guys, since then, man. Look at that. Super drive and ultra mega drive. Man, that is one steep. I don't know what type of I don't know, man. Sometimes we look at that and people say this is healthy, it's bullish, it's upward trends. Yes, it is. But man, look at that steep line, man. On the monthly candle trend, let's say I zoom back. Look, the last time we had it line that aggressive. Let's just check it out. Is it that aggressive back in the tech bubble? Man. Zoom, 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 zoom. It was not that aggressive. Look at that. This is tech bubble, guys. Well, 1, 2, 3, 4. Yeah. And no, tech bubble even went more hyperdrive. So, okay, I guess there's even more. There's more aggressive, man. It could this one here, like that. That's the final skyrocket to the moon, right? This is the moon. That is intense. Okay. So I guess we can still go. There's a ultra mega drive, ultra turbo, man, on top. Let's go crazy. So right now, let me get some of the chart. All right. So we could still go crazy again. Is this going to be the final burst right here? Man, I don't know. I'm just going to leave it there for the fun of it. But that's what I want. Some crazy burst, man. And I guess that type of angle of trend line is going to be represented with price action going super high, and then we'll start getting the headlines. NASDAQ composite to 20,000, you know, all those cliches there where we hear from the mainstream news. So I guess that's not why we're not hearing them right now. This is not aggressive enough. We could still go full bonkers, man, when we start getting that type of month over month over month, and then we just go into euphoria that we'll start seeing red and we'll just be going crazy. A lot of people start buying that crazy top until the tower can't support itself technically and it just falls. Yeah, guys, that's my imagination. Ooh la la. And here I'm going to be moving here. That's the high, the most recent high. And if ever today's August candle goes on top, I'll be moving that red line over until I start reproducing what we got back here, guys. Previous highs. And then how much time it took for it to go down, guys. But in 2008 wasn't that aggressive, right? Look at that line. It was not that aggressive. I guess these aggressive lines, we call them bubbles. Here, it just broke down. So let's move on, guys. Stan Weinstein. What does it look like on the weekly? Outperforming the SPX, man. The NASDAQ Composite's been the best one to be in for a while. Since 2016, man. That's where you want to be. Beautiful stage 2. Just got out of this consolidation work. Retest of that breakout. And then just continuing upwards, guys. So you got to wait. I like it when it's slow. Going up slowly. Low volatility. I love it. This I don't like. So we just got to wait. See how this pans out, guys. But right now, composite, stage 2 all the way. Venture. On the monthly. Look at that. Previous high, 2008. 2007, that's when it peaked in May and then crashed with the rest of the gang. Breakdown, and it was already going down. And never just, this index, man, I don't know what's up with that there, but it just never got back up to those previous levels, guys. And it's been breaking down for a while. Look at that. Not giving any signs of slowing down, en route to target all the way down to 600. So this for me is a precursor index. That's not, there's no money rotating into this, man, into this index, guys. It's just leaving for now. Must be looking the same way on the weekly. Stan, yeah, look at that. Ichimoku cloud red, we're below. Aggressive 30-week moving average going downwards. Breakdown here. Red candles, crescendo. Just underperforming the SPX. Just beautiful, beautiful stage 4, guys. I love it. Picture perfect. Let's go big Papa Bear. TSX. Jump to that. TSX, and we'll do it on the monthly. So the SPX, the TSX actually went up. It's higher now than it's been after the crash. 2008 high. A few months later, down. And then went back up. So right now, look, it had the sideways move right here. And it's it resolved it. It's going out. There's one thing I noticed is it broke out. I didn't like too much the SWIC. I like it when it's a Marabozu candle on the breakout candle. Nonetheless, continued going up. Still a valid breakout on the monthly candle chart. And now it's pulling back. So this August candle, it's bouncing off that breakout resistance, breakout support. So what I call a wall, previous resistance, bust through. Now it becomes support. So it sank through it, but the price action is going back up. So we have to see. I really has to close back above this. I don't want this to close below that breakdown line, or else not a super duper healthy stage 2, man. When you see stuff like that, closes below the 12-month moving average. Not super duper healthy. Not as much as the NASDAQ is looking right now. Okay, SPX 500, guys. Combination of stocks from NASDAQ and New York Stock Exchange. And this is what it looks like. Hold on, Pat. TSX. Let's go back on let's do some Stan. Everybody gets their Stan. Yeah. Not doing too good. Underperforming the SPX. going downwards. The only thing that's why it's not red is because we're still above the 30-week average, and that's why it's not super duper beautiful on the stage 2, as we saw with the Nasdaq. That wasn't a beautiful stage 2. This is I'd classify this as a stage 3 right now on the weekly. SPX 500, and look at this guy, man. I had isolated this candle as the previous high, and we seem to be wanting to break out above it, guys. Still August, price action above, some price action below, and let's see where it closes. But right now, potential breakout on the monthly candle chart with some targets. Arrow, arrow, arrow. Whoa, whoa. With an arrow here on top. With target all the way above 3,000. Got to keep an eye on that. And well, the SPX baseline against the SPX. It's our baseline, right? So it's neutral. You would have wanted this to keep going up and up. We'll see what happens. But still stage 2. It looks a little better than the TSX. So if I put them in order, the Venture goes at the bottom. SPX is better than TSX, but not as good as the Nasdaq. New York. New York. All right, monthly candle chart. Okay, slowing down stage 2. Some price action below the 12-month moving average. And now it seems to have hit some resistance. Price action all the way back down to a month moving average, but getting pulled back up. Gotta let this resolve, guys. Here's still the high. You see how the SPX and the Nasdaq are coming close to their previous highs? Well, this is not there yet, guys. 2008, remember? Highs. Never got back. Tried to go back up. Never got there. Will this pull down? Was this just the highest it could go on the pullback and then go back down? I don't know. Here's my monthly defined breakdown line. Any close below 12,450 is down. Okay, Stan Weinstein. What does this look like on the weekly? Is it pretty? Ish. Yeah, it's a ish. Underperforming the SPX. So even that index you don't want to be in. If you want to be in today, as of today, it has to be, you have to choose something, a sector, an industry in the Nasdaq. Sideways move. The 30-week average is starting to turn over, guys. You have this last line of support, this Ichimoku cloud defined support right here. And if ever it goes down through that, then you have the monthly candle close or the last line of support for that downwards move. Could bounce back up, but right now, definite stage 3 for New York Stock Exchange. And it's looking not the TSX, I guess it looks a little bit better than the New York Stock Exchange. All right, what about Europe, Asia? What's F again? Europe, Asia, Far East index, ETF with all those indices in there. And guys, okay, monthly. Always do the monthly. Yeah. So I had it here back in 2007-8, peaked 5-6 months later, down, broke down before everybody. Notice that here. Broke down right here before everybody, bounced back, bounce, never close above the 12-month moving average, and then timber peak. It bounced back right here, close to 12-month moving average, and now it's going back down. So I had identified some support right here at 65, bounce off that line, not looking good, guys. 12-month moving average angling downwards. You want price action above the moving average, not below it. Anything below is going to drag it down. That means downtrend. And if I go on the weekly to do some stand, we're out of the cloud. So there's no more Ichimoku cloud defined support on the weekly. Look at that angle, man. That's a lot of price action you need above for it to go back up into a stage 2. So that explains underperforming the SPX, under the 30-week average, declining 30-week average. That is a beautiful stage 4, guys. Stage 4 means down. So that is not as bad as the venture, because the venture's been in there for a while. But it's not pretty, guys, for those other countries other than North America. Emerging markets, China, Taiwan, Russian Federation, all the gang. And look, it looks like the EFA, guys. Let's go on the monthly. Oh, I didn't do the 2008 scenario. 2008 scenario. Let's get a vertical line. It had peaked. Change the color, white. And it peaked here and it crashed. Let's move it over. Let's put trend line. Never went back to that previous high. Format, let's choose a color. Blue? Darker blue? And then it went down. It started going down before the other indexes, and in September, timber continued to go down. Is that the colors I had? Yeah. White and blue. And then went back up. Did it go back up? And did it go as high? It never went. See, we never went as high as it was before. And now what we have, let me put that line, that vertical line, that's the high that I have identified. I will put a red color. And it's just not going back up, guys. Bounce back, not even EFA did a little bit better on the bounce back up. And then it's just down. It's reached its target on the monthly candle chart. So maybe that's going to be a little reprieve. And we're going to see how chart morphs. If it's going to have a next leg down all the way back down to this these previous walls. Resistance, turn support. And there's more here. Resistance, turn support. What does that look like on the weekly? Just like the EFA, most likely, right? Out of the Ichimoku cloud, last line of support, underperforming the SPX, 30 moving average going down, price action below 30 moving average, and below a breakdown line, guys. Stan Weinstein will be proud of this stage 4 breakdown, guys. Look at the crescendo volume here on those candles. That's what I look for now, not twice the average of the previous 4 or 5 weeks on breakdowns. You look for crescendo volume. Stan says it's negative. And pull back, and then going back down again, guys. Classic stuff. Classic places to enter on pullbacks. So is that worse than EFA? I think so. Just a little bit worse. So there you have it. So venture stocks on the TSX, stage 4. Emerging markets, stage 4. Non-North American markets, stage 4. New York Stock Exchange, stage 3. TSX, stage, not a super duper stage 2. It's going back into stage 3 territory. SPX 500, our baseline, doing fighting to have a continuation. Come on, Pat. Fighting to have a continuation, stage 2. And all the chips, man, are left in this guy, which is going maybe parabolic mode. So I don't know what's happening. After that, you could start fine-tuning the sectors. saying it's rotation, saying it's something. I checked out the sectors, and I think I'll refresh them very soon. But for me, honestly, this is really, really top heavy, and the NASDAQ is holding everything together. And I don't know where this month's going to end. Is this going to be tweezer tops right here on the monthly candle charts? Right, these two. Is it going to be able to surpass the high that I have identified? Was that the high and we're never going to get back down there? Or if I rely on that we need to go in hyper crazy turbo, everybody's going to think it's a gold rush, parabolic mode, maybe there's going to be a few more candles here. But out of all this, there's one, and then the SPX, which has some stocks in the NASDAQ, that's doing okay. The rest is not super duper. That's how I see it, guys. Long one. I'll get over the sectors for you guys real soon, man. Ciao.